Back in March 2023, for the first time in history, China settled more of its international trade in yuan than in US dollars. The yuan accounted for 48% of China's cross-border transactions, beating out the dollar at just under 47%. This isn't just a shift in preference, it's a warning shot across the bow of the global financial system. Because if China really is walking away from the dollar, what happens next? What does it mean for you? For global trade? For power itself? In this video, we'll break down what China's doing, why it's doing it, and what it could mean for the global economy and for you. Since the end of World War II, the US dollar has been the global currency. Everyone from oil producers in the Gulf to importers in Brazil needed dollars. International loans were issued in dollars. Reserves were kept in dollars. Entire economies were built on the stability and influence of the greenback. So, dollar dominance hasn't just given the US influence, it's given America power. The kind of power that can make or break economies. But China's decided that power has tipped too far in one direction, and now they're doing something about it. Not with fanfare, but with quiet, methodical strategy. After World War II, the Bretton Woods system made the US dollar the world's reserve currency, pegged to gold reserves. Nations trusted the dollar because it was as good as gold itself. But in 1971, the US broke that link, and yet, surprisingly, the dollar stayed on top. Why? Because of oil. Saudi Arabia and other producers agreed to sell oil only in dollars, creating what we now call the petrodollar system. Therefore, every country that wanted to buy oil, which is every country, had to hold dollars. That global demand propped up the dollar's strength and importance. But that strength came with a catch. The more the world relied on dollars, the more control the US gained over everyone else's finances. And it didn't stop at oil. Nations that accumulated dollars reinvested them in US assets, especially treasury bonds. This created a cycle where global savings funded American debt, reinforcing the US's economic supremacy. But this system gave the US more than just financial comfort. It gave Washington a powerful geopolitical weapon. In 2022, the US and its allies froze $300 billion of Russia's central bank reserves. That move stunned the world and raised alarms. So, countries like China saw the writing on the wall. If the US could do that to a country as large as Russia, what's stopping it from doing the same to others? What if the US decided to target China's reserves next? The message was loud and clear. If your reserves are in dollars, Washington can effectively flip a switch and make them vanish. That's not just risky, it's dangerous. So what is China doing about it? In one word, alternatives. Let's break this down. First, China is building currency swap lines. The People's Bank of China now has agreements with over 40 central banks. These deals allow countries to exchange their local currencies directly for yuan, no dollars involved. As of now, the total value of these swap lines has reached a record-breaking $590 billion. Therefore, if you're Argentina, Brazil, or even Pakistan, you don't need to rely on New York clearing houses. You can settle trade in yuan. It's a form of monetary independence. But that independence comes at a cost. It means breaking habits formed over 70 years of dollar dominance and handing financial influence from Washington to Beijing. China is also promoting yuan-based trade settlement. Back in 2017, only about 19% of China's cross-border transactions were conducted in yuan. By 2024, that number had already jumped to over 50%. So, for many of China's trading partners, the yuan is no longer a fringe currency. It's becoming part of the norm. And let's not forget the Belt and Road Initiative. China's sprawling infrastructure program, spanning from Africa to Southeast Asia to Latin America, is increasingly being funded and repaid in yuan. But infrastructure is only part of the story. The real disruption is happening in energy. In March 2023, France's Total Energies bought LNG from China in yuan, the first such deal settled in the Chinese currency. That wasn't just symbolic, it was proof. A Western company showing that yuan-based energy trade is already happening. But here's the twist. It wasn't one of China's usual partners. It was France, a major US ally. Meanwhile, nearly all of Russia's oil exports to China are now settled in yuan. The financial realignment is already happening, just not where you might expect to see it. If countries no longer need dollars to trade, what does that mean for the role of the US in the world? And perhaps most attention-grabbing of all, back in 2023, Xi Jinping visited Saudi Arabia and publicly urged Gulf nations to accept yuan for oil. While it hasn't fully materialized yet, the fact that this conversation is even happening suggests a tectonic shift in motion. Picture this: Saudi Arabia agrees to sell even a portion of its oil to China in yuan. That doesn't just rock the boat, it rewrites the rules. Therefore, the petrodollar, the cornerstone of dollar dominance since the 1970s, suddenly isn't a given anymore. But we don't need to speculate to see change. Russia has already flipped the switch. Every drop of seaborne Russian oil going to China paid in yuan. And as of 2025, over 95% of trade between China and Russia is now settled without using the US dollar, with the yuan dominating those transactions. This is no longer a trend. It's becoming the default for two of the world's largest resource-rich economies. Brazil, Iran, Pakistan, and several African nations are also shifting. Some have already begun. Last year, the yuan became the most traded currency on the Moscow exchange, overtaking the dollar. And in 2025, it's held that position, reinforcing Russia's long-term financial pivot. This brings us to a critical evolution: the rise of BRICS as a global force for financial independence. Originally formed as a loose coalition of emerging economies, BRICS has morphed into a serious geopolitical and financial player. In 2024, BRICS expanded to include Iran, Egypt, and the UAE. Then, in 2025, Indonesia became the first Southeast Asian nation to join as a full member. Together, BRICS countries now represent over 40% of the global population and nearly 35% of global GDP. These countries are coordinating on issues ranging from trade and energy to finance and even defense. They're building new trade frameworks, issuing cross-border digital payment systems, and launching new financial institutions. The BRICS New Development Bank, headquartered in Shanghai, is issuing loans in local currencies. And as of 2025, nearly 30% of the bank's total lending is now in local currencies like yuan, rubles, and reals, up significantly from 22% in 2023. In other words, they're not joining the game, they're changing the rules. So, what once seemed like a distant fantasy, a world beyond dollar dominance, now looks like a work in progress. So, does this mean the dollar is finished? Not quite. As of now, the US dollar still accounts for about 58% of global central bank reserves, and it's used in nearly 90% of currency transactions. The yuan, for comparison, is still under 3% in reserves. But here's the thing: empires don't collapse overnight, they crumble slowly. So, every deal made in yuan, every BRICS expansion, every swap agreement, it all chips away at the foundation. Over time, those cracks become fault lines. We may not be heading toward a world without the dollar, but we are likely heading toward a world where the dollar is no longer alone at the top. If that happens, the implications for the US are significant: higher borrowing costs, less leverage in foreign policy, a recalibration of its role on the global stage. Therefore, what we're seeing isn't just a currency trend, it's a shift in the balance of global power. And China's leading the charge, not alone, but with a growing chorus of nations ready to rethink how the world does money. The dollar didn't rise to dominance in a day, and it won't fall in a day either. But make no mistake, the shift has already begun. What do you think? Could you imagine a future where 3 or 4 currencies compete equally for dominance? Leave your thoughts in the comments, and if you found this insightful, make sure to like and subscribe.